Hi, folks. Dan Bird here with the daily scan for the 23rd of December. It's almost Christmas. And is the Santa rally coming? It officially starts tomorrow. Tomorrow's only half a day, though, in the market. So we'll see. I'll continue to track it. And I will post what it looks like for the first day. And I will actually look at it every day throughout the Santa rally. Santa rally officially is the last 5 days of the trading year and the first 2 days of the new year. So that is tomorrow is the beginning, even though it's half a day. So we'll take a look and see what it looks like. Interesting moving moves today. For a disclaimer, I am not a financial advisor. Nothing that I say should be construed as advice or recommendations to buy or sell. It is for educational purposes only. You should do your own due diligence and understand your own investing style and risk profile. And if you would like to engage with a financial advisor, you could check them out right here and see if they're reputable. So let's take a look first at what the market looks like. Market bias actually ticked down slightly today. And that's usually what happens when it gets near a bottom. It starts to flatten out before it starts to move up. Right here, it was kind of a V bottom back here in November, but we'll see if that changes. Still is an orange light, so caution is still advised. However, I think we're starting into the end of year rally. If it does begin tomorrow or later this week, hopefully, we'll see how that goes. Look at the S&P. First, you can see S&P certainly looked nicer today. And lots of things look like this, actually. So S&P started back up on Friday, pulled back again. Today, it reached almost the high from Friday, so it's continuing to move higher. That's a good sign. NASDAQ, same thing, almost identical. So the NASDAQ is moving higher as well. The Dow, which has been the laggard, it actually has a little hammer right there, so it moved higher as well. It looks to me like everything is setting up for that Santa rally. So if you remember Friday, I said, is this a dead cat bounce? Well, might be proving that it's going to have some legs. We'll find out. How about Bitcoin? Bitcoin actually sold off today, and we'll look at this a little closer. Let me log in. By the way, this is what I was not logged into stock charts, so that's what the charts would look like if you're looking at them on my website and you do not have a stock charts subscription. But if you do have one, it's way, way better. So again, we'll take a look at Bitcoin again now that I'm logged in. Again, that's what it looks like. If we'll take a closer look, it actually has a spinning top doji right there, or a doji. So it's sold up, sold down. It came right back to almost identically, almost exactly where it opened. So it opened at 95.098, and the last was 94.983. So pretty darn close. A lot of times that is a reversal, and it's sitting right on the 50-day moving average. So it could imply that it's going to start to move higher, but it could also be, because it's in decision, it could also be in a continuation pattern. So basically what that means is you don't know until you get confirmation from the next day. So if this does start to move higher, that will be a positive sign, especially if it gets above the 21-day. However, it could just as easily go lower, and if it goes below the 50-day, then it's confirming a downtrend. So you need confirmation. And it had big volume today. Volume was negative, but it didn't really end much different than it started. So I wouldn't put too much into that volume for today, but we'll see what happens as we go into tomorrow. Okay, let's take a look at the, let me refresh because it still thinks I'm not logged in. We'll look at the dashboard. So you can see the Dow, not much up, S&P, not quite 1%, but the NASDAQ was almost 1%, and the NASDAQ 100 was more than 1%. So NASDAQ 100 was the winner for the day. VIX came down, now it's below 17, so that's what we wanted to see. A VIX below 17. All of this is lining up for perhaps an end-of-year rally. Now, small caps still aren't taking off yet, so we're going to really need to see those start to participate. And hopefully that will, they usually historically starts this week, goes right into April. So we'll see if they start to catch fire. Technology was the leading sector today. Healthcare, energy, two of the kind of the defensive sectors were in the top three. Communication services is an aggressive sector, so it's quite a mix. Real estate and utilities are the most defensive. So from one perspective, it was a mixture, but it also could mean that the breadth was starting to broaden out. So semiconductors, that was the key today. Semiconductors moved up. I'm going to show you something else with semis here in a minute. Renewable energy, also in technology, moved higher as well. Automobiles, of course, where Tesla is located. Internet, so a lot of the aggressive industry groups as well starting to move higher. So that's good. On our top 10 combined list, the top ones for the day, the number one top one was this one here, DESP. You can barely see it, but it's right up near the upper right of the chart. So I think they had earnings, and they gapped much higher today, up 32%. So that's a significant move for that one. I wouldn't chase it there. I would wait for a pullback, but it looks like they have some really positive news for that one. And this here, Axogen, I think, is also in the healthcare space. So a number of healthcare stocks actually moved higher, and that one looks really good. Lunar Intuitive Machines had a nice open, but pulled back. So that's a failed breakout on that one. ACRS, this one looked pretty interesting earlier in the day. It looks like it might be trying to recover. This is a typical downtrend reversal potential. So we'll keep an eye on that one as well. Broadcom, of course, starting to move back up again after a huge run last week. HIMS has been in the top 10 list for quite a while. It pulled back and looks like it's starting to run. By the way, I did not add anything to the daily scan today. I might do that tomorrow. We'll see. This one here was the one that looked the most interesting to me. SEI, Solaris Energy Infrastructure. That one looked very interesting. So let's take a look now at, before I jump into some of the other things, I'm going to look at one chart that a subscriber asked me to look at, and it is DXCM. Again, still thinks that I'm not logged in. Let's try that again. DXCM. There we go. All right, so this is just moving sideways. Let's look at a longer term one-year view. Had a huge sell-off, starting to move higher. This is one, by the way, something I'm going to do this week for annual and monthly subscribers. I'm going to run a scan based on some of the information that Stock Traders Almanac posted about stocks that are reaching a 52-week low. So stocks that have sold off all year long, and there may be people that have been in it, maybe taking end of year tax losses. They a lot of times will start to bounce in the first week or two of January. It is not meant for a long-term investment. It's really meant for a trade. So I'm going to run a scan to show what some of those might be, and I will share that with annual and monthly subscribers. I'll show folks maybe the one or two from that scan and what happened. This looks kind of like a stock that might qualify for something like that. You know, it started way back here in March at 140 and went all the way down to 62. So more than 50% loss. And even now, it really hasn't gained that much. So this is one that there might be tax loss selling with at the end of the year. We'll watch that next week. And then in early September or early January, it might start to take off. So we'll see, but it's got a lot of work to do. It needs to get above the 200-day moving average. It needs to close this gap. There's lots of things wrong with this chart. It's pretty much broken. But if you are a believer in their technology, it's medical supplies, then it might be one, especially if you're a long-term holder, then all of this is just noise. If we look at a 3-year chart, Pretty much looks the same. I mean, it was going sideways, couldn't really break above 140, tried to get up around that area 3 times and got rejected 3 times. You can see right there, coming back almost to where it is now. So it has been pretty consistent in the way that it trades. If I go back, let's go back 10 years just for fun. All right, so look at that sideways move. So interestingly, though, this is a very long basing pattern. So theoretically, if you're willing to hold this for the long term, this could break out and have a similar move to this down here. I mean, this was way down at $10 or something. The bottom here it was, yeah, $10, $11 was at the bottom. It moved all the way up here, and then it's just been moving sideways for a very long time, moving sideways for basically 4 years now. If we take a look at this, I wasn't really prepared to do this, but I'm going to give it a shot. We take a look at this on my new ACP charts. This is the new platform for stock charts. They will maintain both platforms, by the way, but this is their platform. And let's see, just started to learn this because I had a subscriber ask why I didn't show these. And I actually like both. I like both the old and the new platform. So the bottom left down here is a monthly chart. And I'm going to do this for DXCM because it has such a long basing pattern. So what you can see down here, if we look at the monthly, this is very long term. So what you want to see is this blue line. This is the ADX line. It basically shows the strength of the trend. If this is below 25, then there really isn't much trend. Or another way of saying that is it's going sideways, which is what it's been doing since 2022. So 1, 2, 2.5 years, almost 3 years, just going sideways. You can see it right there. When something like this breaks out, and it's not breaking out yet. So I want to highlight that. This just because it's going sideways doesn't mean you jump in. You could have jumped in back here and you'd still be waiting 1.5 years later because it's still going sideways. But these are all monthly bars, by the way. But once it does break out, it can be very powerful. I'll show you this on one that did break out. Now, this is a weekly chart over here. If we look at that, it had a squeeze right here, and the squeeze just fired. So based on this squeeze, and it looks like it might be starting to head higher, it might actually start to move back up and go back up to that 200-day up here and close this gap up here. So it may be building up enough energy to do something like that. We'll see. We'll have to keep on watching it. So that's a weekly. If we look at a daily over here, you can see here it's also in 2-day squeeze. So John Carter, who watches these, likes to see 5 of these. So now we have 2, and the ADX line is still below 25, but the green one, which the ADX line shows the strength of the trend, the green and red shows the direction. So you can see the direction has just changed to up. So this might be very positive. It has some resistance right here at about 82, 81. If we can get through that 82 level, then it could have a good chance, and all of the momentum is starting to move higher. So this one might be actually building up some energy to start to move higher. We'll keep an eye on it. So the person that asked me about that, I assume they've been in it for a while. This is, by the way, these are Keltner channels. I am going to do this as the Technical Tuesday tomorrow. I'm going to talk about Keltner channels and how to use them. Right now, it is still in the 1x level. It hits an extreme when it gets to the 3x level up here between the blue and the red in this area. That's usually where it reverses. You see it did right there, it did right there, it did right there. It has a ways to go. I mean, it needs to get up here to about 84 or so, but these channels could move higher. So that looks fairly positive on the short term. And then this last one here is just a 30-minute chart, just for trying to do entries and that type of thing. So by the way, the person that asked me about the ACP charts, I actually have now put these on the website on the charts page in the lower left-hand corner. Well, where did I put them? Oh no, chart lists and scans page. Sorry, not the charts page. Chart lists and scans page. I just did this, so I forgot where I put them. Here's the ACP charts right here. So if you click on any one of these, you'll get the one that I just showed you. It'll show it to you for, I think, the S&P. Yeah, it's the S&P. So there's the format right there. So if you are an annual subscriber, all of those charts, the formats for them are all right there on the website now. So you can copy them into your own stock charts platform and have those same views all set up for you. And I probably will add more as we go along. But these are all the ones that are in that 5-panel default, these top 5 up here. All right, so that's it for DXCM. So let me take a look at, let's go here, and I want to look at the VIX, because I mentioned that the VIX was down below 17 now. So that's what we wanted to see. So there you go, right there. And someone who had asked me how to trade the VIX, I talked about this a couple of days ago, last week, I think. And I said, it's very difficult to do that. I don't recommend trying to trade the VIX. But probably the best way to do it is wait for it to spike significantly. And this means you have to watch it all the time. So if you get a big, huge spike, then buy the inverse. This is not a recommendation, and I don't recommend people do this because the VIX is extremely hard to trade. But if you do want to try it, then do an inverse of the VIX on the day that it spikes, because it usually will pull back pretty quickly. You can see right there, just 3 days, we went from the high of 28 down to a low of 16. So pretty significant move, and it looks like it's continuing to move lower, which would be good. If we get down into the 17 area, especially into the end of the year, this is just one thing that might be confirming that Santa Claus rally might be getting ready to start. Let's hope that it is. One other chart that I just added here from a recommendation from a subscriber, and I'm going to talk about this in more detail and actually show you what he sent me in the newsletter this week. But it's basically the advanced decline line, which is actually a very interesting way to look at sentiment. So the blue line here is a 5-day moving average of the New York Stock Exchange advanced decline. And then behind it is the actual price, the New York Stock Exchange price. So you can see where it pulls back and where it starts to go higher. If you'll notice down below, when it gets below, in this case, I put the 500 level down here, and the top one is the 800 level. But when it gets down here below about 500, then that's usually where it reverses. So we can look at this one here, just follow that line, that very light line up to, it's right here, just before the reversal. This one over here happened right there, just before the reversal. There was one here, same place, one over here at this reversal. So you can see it's a pretty reliable. You can see back here, this is in 23, reversal right there. But look where we are right now. We are right at that same point where it's, but in fact, it's lower than any of these except for the one back here at 23. So if I put it to the low right there, you can see the only one that's lower is this one back here. And you can see when that one started to move up like this is doing right now, then we got a reversal. So again, just one more piece of data saying that that Santa rally might be about to get started here soon. Excuse me. So let's go back here and take a look at IWM. So we've talked about the Russell 2000 small caps. Again, huge. It's been just doing nothing but selling off. This week is when small caps usually get started. And they started a little bit today, but really didn't get back even to the high from Friday. So not too impressive, frankly. for the small cap so far. So it really needs to prove itself more than this to say that it's actually starting a move. Again, right there, it's below the cloud. The 21 is getting ready to cross the 50, so that's going to be a short, medium term down signal. Momentum isn't really turning up yet. Accumulation distribution, the pink line here, is just beginning, but still really isn't confirming much. So I wouldn't be jumping in just yet. I would want to wait for a little bit more confirmation. The 3X small caps kind of looks the same. So it's maybe formed a little hammer down here. Might be positive, but again, it's just gave a medium-term down signal as well. So not one that I think I'd be jumping into just yet, unless you want to play a risky game and try to catch the bottom. But you never know. Catching the bottom, sometimes you get cut by a falling knife. So I would personally wait for a little bit more confirmation before jumping in on that one. So that's it for small caps. One thing that I do for annual subscribers, every so often, I have a scan that runs automatically, and I'll show it to you here. It's called the short squeeze scan. So this is what it gave today. AVXL, I sent out an email earlier today to all annual and monthly subscribers showing whenever I get a short squeeze alert. So short squeeze means the stock has, let me turn this off just to make it a little easier. So the criteria for the short squeeze is that it needs to have more than 20% of the float short. It needs to have more than average volume. This certainly does today. It had it on Friday too, but Friday was options expiration, so that often can happen. So it definitely had higher than average volume. It needs to go up by more than, I think it's 7% or something, and it needs to end near the high of the day. So there's a number of criteria involved. I also make a point of saying that shorts do not feel pain until it gets above I want short squeeze candidates, until it gets above a resistance level. So more than 21% of the short was the float was short. So all these people are short, went back up, they shorted again, went back up, they shorted again. But today it went up above the levels that all these people shorted. So what that means is they are now underwater. So they're losing money. All the shorts are losing money. So there's 21% of the float that's losing money now. So that's where the shorts start to feel pain. I'll do this in a technical Tuesdays at some point in the future, but this is basically it's called chandelier exits. And the red area there is for shorting. So if it gets above that, that's where you put your stops to get out of a short. And you can see right there are probably lots of shorts with their stops right there, which means they have to buy. So not only are people, are longs buying, but shorts are buying to get out of their losing positions. And you can see that today was earnings. So if we look at, if we take a look at, I'm just going to, out of curiosity, I want to see what earnings look like today. You can do this in stock charts. We'll go here for symbol summary, and we'll look up AVXL. And actually it's pulling back now. This was up 2.5% earlier, but now it's pulling back after earnings. So that's something that you want to watch. The reason that it went up was probably because of earnings. You can see right there, almost 30% up today. But perhaps it's pulling back. So it might be an opportunity to get in. It also might be shorts might be shorting again. So this is one to watch. This is one of the reasons why this is not a strategy for long-term holders. This is definitely a short-term strategy, but you can make some significant amount when this really takes off. Right there. So we'll keep an eye on that tomorrow. If it does pull back, maybe it'll continue to go higher. I don't know. Momentum looks pretty good. So we'll see. Um, next week I'll show one stock from the 52-week low scan. I'm also going to do a dividend scan next week, and that's meant for long-term investors. It'll be a list of stocks that have great dividends, and there'll be a couple of different iterations of it. It'll be on. You'll need to have an annual subscription for that. I'll have it on the website on the portfolios page. So I'll have a separate column over here with the dividend scans, and you'll be able to see that. All right, so that's where we are. Santa Rally might be getting ready to kick off. We're going to find out here very soon. Let's take a look real quick at the intermarket relationships, because this is important at the end of the year. What we want to see is for NASDAQ to outperform the S&P. We want to see growth outperform value, and actually it just broke out from that previous high from last week. That's good. And we want discretionary to outperform staples. That's just now starting to move up as well. But as you can see, mid cap and small cap are still not changing. So this is all being driven still by large cap tech. So we'll have to keep an eye on that. Which, by the way, I'll show you another one of the scans. This one here, there's only one stock on it. So this is a scan that hit today. Look at that. This is when the 5 crosses the 21. And then this is the short-term signal. And the way I have this set up is it will actually send an alert when it's just before that happening. So one more day, this is actually going to happen. So this alert actually sends something just before the 5 crosses the 21. And look what we got today. There's only one stock on it, and it's NVIDIA. So right there, NVIDIA is sitting right at the 50-day moving average. NVIDIA may be ready to make its end-of-year run. Look at the momentum starting to move up. This line needs to get above 0 to confirm an uptrend. Here's right down here, the green one is long-term money flow. The gray one is short-term money flows. So short-term starting to move up. Accumulation distribution is starting to move up. The MACD is starting to move up. Everything looks like it's lining up. And just one more confirmation that that Santa Claus rally might be getting ready to kick in. So back here on the charts page, semiconductors, you can look at that and see what it looks like. And you can see right here, and I talked about this last week in one of the videos, I said that the semiconductors had been on an upward trend, and it went below it slightly into the cloud. And then for that end of year rally, we need to see this start to move higher. And that's exactly what it's doing. Not only is it moving higher, it's doing so with authority. It's broken out of this resistance right here. It's hit this resistance level up here 3 times. So if we can break through it, then that is going to be extremely positive heading into January. Let me look at this on a longer period if I can. Well, let me do it a different way. I'm going to look at SMH, which is the same thing. And we'll look at it on a 1-year chart. So here's the double top. Actually, this is the triple top up here. And then we're going to change this to a 10-year view, and we'll make it weekly. And now you can see right here where the top is right there. So if that can break out of that top right there, which is the high is 281. This closer in high here is 260, and right now we're at 250. So 10 points to break out of the short term, and then 280 is not far behind it. If we can break out of those, then this is going to probably lead the market higher. So this is actually good news for the end of year rally, that semiconductors are really starting to take off. So we'll keep an eye on that, look at it again. The other scan that hit today, this is, show you this one too. This is the downtrend reversal scan. You can see NVIDIA is on it. Taiwan Semiconductor is on it. Celestica is on it. This is a technology stock as well. This has just been doing nothing but moving higher. This has been one that has been consistently in the top 10 list. So one that we like to see continue to move higher. So it just hit the 21 day and looks like it's starting to move up. So it's right near the $100 point. So it likely is, that's a round number. It looks to me like it might be getting ready to break out of that as well. Look at that beautiful move all the way from September. So this is one that has been consistently on the top 10 list for quite a while. Looks like it might be continuing to move. It's pretty far away from the 21 day, so 21 week here actually. So it might need a rest to move sideways for a bit, but we'll keep an eye on it, see what happens. All right, that's it for today. Thanks for watching, everyone. Good luck trading and have fun with the Santa rally kicking off tomorrow. Technical Tuesday tomorrow will be Keltner channels. I'll talk about what they are and how to use them. So stay tuned, and I'll talk to you later. Take care.